Back in May, we called the absolute bottom on NVIDIA. Price pulled right into our smart money zone. Since then, the stock is now up about 109%. But as of the past month, I did say that there is a good chance that price was either going to sell off a little bit or compress sideways. And since then, that's basically what has happened. When the BX trender turned red on August 25th, price pulled back about 7%. Now we are up about 3%, but that was a really good time, in my opinion, to at least be sitting out until we get confirmation of a breakout to the upside, which we are finally getting now. And so in this video, we're going to talk about why there's a really good chance NVIDIA is going to break out over the next month, easily up to about $200 to $210, and why I think that breakout is happening. If you don't know who I am, my name is Peter DiCarlo. I've been a full-time quantitative trader for the past 11 years. I've grown my fund to over $5 million with only a 62% win rate. And my goal with these videos is to share with you why I take my positions, why I exit my positions, because it helps to hold me accountable. And more importantly, I would have died for this type of content and information when I first started trading. Now, the reason that we called the bottom on NVIDIA back in May was simply because price was pulling into our smart money zone. One of the most important things that we focus on within our trading strategy, which you can learn the entire strategy, get access to all the indicators that we have completely for free with the link in the description. But the most important part of our strategy is that we are trading with weekly market structure. The market is normally going to move in a very simple manner. We are normally either going to have bullish market structure, which will look like this, where price breaks out into highs, pullbacks into higher lows, and continues this move up, or we're going to have bearish market structure, which is the opposite. I only look to trade bullish market structure. So in most cases, price will break out, pull back into this institutional buy range and the smart money zone, which is going to be an extreme discount, and then bounce from there. This is why we were bullish back in April and May, even though the entire world thought that it was ending and that tariffs were going to be the end of everything. If anything, this was a beautiful buying opportunity, not just for NVIDIA, but for the S&P 500 as a whole. This was also a great time to be buying for AMD. So what I'm looking for first and foremost is a stock to have bullish market structure and to only be buying and focusing on these institutional buy zones and smart money zones. And we teach how to spot those within step 3, smart money mastery of our trading library. Now, since then, buying pressure has come in on the BX trender. The stock broke out nearly about 100%. Now, as I said in the beginning of this video, we did post at the end of August that this was a potential top for NVIDIA. And the thing that you have to understand is that when we're breaking out within this type of bullish market structure, we really want this BX trender to be green because we want to be breaking out with buying pressure behind it. In most cases, when we're breaking out and then the BX trender turns red, it's not a time to short. It's not a time to go against the stock. It's normally either a time to just close the position entirely and then wait for buying pressure to come back in or start trimming some profits. Now, since then, if we zoom in on the daily chart, you're going to notice that price did sell off a bit. Price hit a low of about $165 to $170, but most importantly, we held that level. And we were saying the entire time that if we held this level, breakout could still be in the cards. Every single post was talking about how the bulls were still in control as long as we held these levels. And you can see that we ended up bouncing, and now we have an inverted head and shoulders pattern that looks like price is going to break out. And that's why I think that this breakout up to that $200 to $220 level is most likely going to happen. Now, an inverted head and shoulders pattern is a very simple price action pattern. Essentially, price will normally sell off and then bounce. Price will come up, most importantly, to this previous high. Remember, we were talking about bearish market structure and bullish market structure. Well, bearish structure, price will normally make a lower high. In this case, that doesn't happen. Price will actually come up to make an equal high. So price comes up to this equal high. Price will sell off into a lower low. Price will come back into this equal high. Price will come back down to not a lower low, but normally meet this previous low, which is that shoulder, and then come back up into that equal high. Now, the important aspect, there's really two of these things that really matter when it comes to this, is first of all, this equal high. This specifically is called a liquidity zone. Now, we talk about this a lot within our courses, But essentially, a liquidity zone forms when repeated price tests that resistance or tests that support. And the more times that level hits, the greater of a chance that we actually sweep that liquidity zone. A very good example of a liquidity zone that just swept that we were trading was this level right here on Tesla. The more times that that liquidity zone got hit, the higher of a chance for a breakout. And the other important thing is that this sell off here never takes out this previous low. This would not be an inverted head and shoulders. It's the fact that we're hitting this previous low that gives us that shoulder. Now, in most cases, price will do this, continue to tap the liquidity zone, and then sweep and break out to the upside, which is what I think is going to happen with NVIDIA here. You can see in this case, we have our left shoulder right here. Price sells off into a lower head. Price sells off into a shoulder. And as long as buying pressure continues to step in, we should sweep this liquidity zone within the next month, move up to about $200, which would be my first target. And then my best case scenario, which I think is a stretch, would be up to about $224 or about a 20% move to the upside. So as long as this level continues to hold, I do think we might get some more compression, but it looks like NVIDIA is probably going to have at least another 10% to 20% move to the upside within the next couple of months.